right, back on NewsNation Now. Our look at the financial markets each and every day here after the close on Wall Street 19 minutes ago. The Dow down by 0.75%. The S&P and the NASDAQ down more. Tech stocks have been rough here the last couple of days, down almost 2% again in the NASDAQ. So let's go to Doug Flynn on all this, certified financial planner and co-founder of Flynn Zito Capital Management. And, you know, the one thing today was and it says it at the bottom of the screen right now, is the economic growth number was good and better than expected, almost 5% in the third quarter at 4.9. What's the takeaway from that? What does it mean?
Yeah, that's actually really good. I mean, it comes from the consumer spending, as we know the consumer keeps spending, but it also comes from inventory buildups and retail spending and quite a lot of things. So it's actually much higher than thought. And so, you know, there's two words in financial news that everything seems to fall under, and it's soars or plunges. And so this is considered soaring, and I would agree it actually fits today. It actually matches China's GDP output, which we haven't seen in a long time. So it's actually good news.
They're usually growing a lot faster than us, but
exactly.
So it's good news. That's an interesting point. It's good news, which seems obvious, but sometimes good news is bad news for financial markets because it means the Fed's going to keep raising interest rates. But your take is it's good news for regular people.
It definitely is good news for regular people. I think unemployment being where it is, you know, they just might be able to navigate this landing that we're trying to do to avoid a hard landing, which means, you know, lots of layoffs and recession. And maybe we can kind of just ease into this because things are, you know, they'll keep interest rates where they need to, but maybe we can kind of slide right in. Look, this is for this year. The outlook across everything for next year, everybody keeps putting out, is kind of bleak. So we don't know how long it's going to last, and everybody's kind of setting us up for a weak next year. And maybe if we come in a little stronger next year, then things do even better. But that's what everything seems to be setting up for right now is, you know, take this while you can get it, but it's not going to last.
Yeah, that's why we can't just have good things. We can't have nice news. We have to always say, but the future's still a disaster, because that's just the way the world is right now. The couple of other financial news items I think we can go over. One, the UAW strike we've been looking at a lot. And now you get this deal tentatively in place between Ford and the UAW. So maybe that's something we could soon put in the, I guess I could say it, the rearview mirror, but I mean, we could put this behind us.
That would be great. I mean, about a third of the workers have been on strike, so they'll get back to work very quickly, and that sets up for the other automakers to settle their disputes. And this is a sort of a win for the people. The most important thing I think of this is that the initial starting salaries jump most significantly, even though everybody wins. And it's a delicate balance, right? The executives don't want to give away too much because then their bonuses might get hurt, but and you don't want to hurt earnings too much, but you want to give enough away without having to raise prices on the cars, because ultimately, if you raise too much, the consumers are going to pay. So it's a delicate balance, but I think they did a good job. They started with $40 an hour. They're going to end up at $25 of a raise an hour, and with cost of living adjustments get into the 30s. So I think that's very reasonable, and that's what negotiating is all about.
Final thing on the company most of us still call Twitter, but it's X. It's owned by a guy by the name of Elon Musk, who has a lot of money. He's the richest human on the planet. But since he took over, did you see these numbers? The numbers on Twitter or X, the numbers of people using, and there they go, the app downloads worldwide, have really gone down by a lot. I mean, what do you make of this? What's going on?
Yeah, so looking even deeper, what we'll pay attention to is not only that, but it translated into a lot of lost ad revenue. I think he's down more than $1 billion in annual revenue. And just like my own situation and knowing how we used to use Twitter, if we would put something out to promote, you could actually select, hey, I'd like to get more engagement or more followers. And he took that option away. And I think that's $100 or $200 million a year piece of the business. And the only answer was, well, I'm going to come out with something better. But he hasn't. So I don't know what the end game here is, but it's definitely translating into a shrinking ad base and less revenue. So we'll see what happens from here.
You're talking about boosting a post, right, like you used to do. You
exactly.
and that would be revenue for the company because you would pay for it, right? Well, some of us don't have to pay to get more followers, Doug. I mean, but I'm sorry that that's your situation.
Yeah, I'm really sad. But maybe doing this, we'll get some more. So
Well, yeah,
Follow us at Flynn Zito.
not according to those numbers. Doug Flynn, thank you, sir, and we'll see you soon. Now,
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.